welcome back to my channel. It's your favorite YouTuber, JVceo. I'm just kidding. I do hope to be your favorite YouTuber in the future though. To all those that have subscribed up until now, tuned in, supporting, commenting, sharing my video, honestly, I appreciate you guys. You guys are what I call the early supporters, and I'd never forget it. So just engage with my channel and let's get going. So today I'm talking about credit. We all know about credit, but do we really know about credit? Today I'm going to break down all the hacks with regards to credit. I'm going to touch upon the advantages of having a good credit. Then I'm going to break down the main things that damage your credit, and then I'll show you all the hacks behind it to actually just get your credit moving in the right direction. And just a bit around this, I'm very knowledgeable about credit. So I own a consultancy coaching firm, and part of the service that we do is credit repairs. So if you want to get it going yourself, you've got all the tools, you've got all the tricks, and you can then smash it out yourself. Stay tuned, subscribe, and let's get going. So firstly, we all know credit, but let's not be confused. The best way I love to explain credit is your credit score is an aesthetic, and the way you manage your credit profile is the real credit. So to simplify it even more, sometimes you would see someone, let's say an 18-year-old with a credit score of, let's say, 950, and you would see someone slightly older with a credit score of, say, 720, 750, and that person with a quote-unquote low credit score tends to get better credit than the person with a 950 score. Because like I said, it's not just about the score, it's about what's beneath the score, it's about how you manage your profile. Another analogy that I love to use is if you're a driver and you pulled up, to an old Golf, for example, it looks old, the body looks old, but underneath it's got a powerful engine, it can kick. And then you pull up maybe your new Astra or your new BMW, brand new body, brand new tires, and you're thinking, yeah, I could smoke that Golf. But once you're off the line, you realize that the Golf packs a punch, and that's exactly what credit is. It's about what's underneath the hood. So what are the advantages of actually having a good credit? Firstly, you can save money by attracting lower interest. So an example being, if you're doing a mortgage, is the difference between getting a 2.7% interest rate versus a 1.4% interest rate. And for those of you that have bought a house, you would know that those margins are huge when you take into consideration a 25-year term or 30-year term. In addition to that, having great credit is a bragging right as well. I've always fluctuated around, let's say, 850 to 990 and so on and so forth. And whenever I'm up in the 990s, it's a bragging right. I'm tweeting about it, I'm putting the pictures out there. So that's another reason. And finally, some jobs actually require you to have a certain level of credit before they can hire you. So in effect, having great credit exposes you to a variety of work that probably wouldn't be available to you otherwise. Thought it was a lens, but it's not. It's a mug. So let's continue. Before I even give you the hacks to fixing your credit, what are the three main things that you have to keep an eye on, right? These things come before the hacks. Firstly, you need to make sure that you're on the electoral roll. If you're not on the electoral roll, forget about it. You could literally master everything else that I talk about in this video, but your credit would never be up to par or would never be where you want it to be. That is the most biggest issue. So go onto your Experian, make sure that your credit profile, that the address on your credit profile matches, and that you're actually registered on the electoral roll. If for whatever reason it's not matching, it's incorrect, just make inquiries right away. Make inquiries with the local council, make inquiries with the platform, that being Experian. That's number one. Number two, avoid CCJs at all cost, right? And how do you do that? I've spoke about this before in one of my debt videos in the past. It's about tackling your debts as they come, right? The more you ignore it, the more that these companies go behind your back, go to the court, and they get an order against you. A CCJ is called a county court judgment. That's when you owe an amount to someone, and for whatever reason you haven't paid it, they've gone to court and they've won the case, so the court awards them the order and a detrimental note is placed on your credit file. How do you avoid this? I mentioned this again in one of my earlier videos. Most of these companies are happy with a payment plan. An example being from one of my old residences, I had an outstanding water bill of a couple thousands, and I was really bad with the bills back then. But I got around to, creating a payment plan. I've moved out of the property now, so, the bills it's not adding. If anything, it's just reducing. And I'm only paying £30 a month. But most people will just ignore it, and that's how it gets to a CCJ. So firstly, it's avoiding the CCJ. When you then get to a CCJ, there are ways of actually tackling it. You can get CCJs set aside. If you need more information on that in terms of like getting a form filled out and the process and how you actually get that done, then just drop me a private message and I'll be able to help you through that process. The final thing in terms of making sure that your credit is in good standing is avoiding defaults. So under defaults, we've got late payment and we've got missed payment. If you've got a contract, if you've got, a commitment to a company to pay X amount, make sure you pay X amount. Otherwise it comes on your profile and literally one single late payment can drag your score down by as much as 150 to 220 points in one single month or one single report. So it's important you stay on top of those. And now to the best part of the video, for those that are still watching till now, the hacks. So I'm going to break it down into two categories. Firstly, managing your existing credit. And then secondly, hacks with relating to you seeking new credit. Number one, right? There's several different rules about this. I use the 60-40 rule, which means I try not to use more than 40% of my credit limit, and then I pay it off in full before the end of the month. But officially, the recommended is 30% of your credit. Some people go as low as only using 10%. And in a nutshell, the lower you use, the less credit risk you are to lenders, and the happier they are with the way you manage your credit profile. So that's number one. Use 40% or less of your available credit on all your credit cards, and then make sure you pay it back in full at the end of the month. But now there's some of you watching this video who have maxed out your credit cards. You might have a credit card with a limit of £5,000 and you've maxed it out. Your minimum payment is maybe, £120, £150 a month. And even with those minimum payment, once the interest gets added, you realize that you're actually not paying down the £5,000 debt. So now you're stuck between a rock and a hard place. What do you do? The best thing to do, if I'm honest, is to get a personal loan and use it to pay off the credit. The reason being, firstly, in terms of the interest on a personal loan is a lot cheaper than the interest you would get on that £5,000 credit card. Secondly, is the negative impact that it leaves on your credit profile. Every single month, you not being able to pay beyond that minimum payment leaves you with a very high utilization. So if you check your Experian, you'd see that your utilization is maybe 101%, 102%, 105%, because you're not paying down the debt and the interest is raising it past the £5,000 credit limit. So use a low interest loan to tackle the credit card debt. This is mostly applicable when you have a large credit card bill. If it's under £500 or a grand, I'm sure you could work extra time at work and pay that off. Number two, you need to build your number of settled accounts, because this reflects positively on your credit profile. And in addition to that, you need to increase your credit age. Hence why I said, someone who's slightly older would always have a higher credit age than an 18-year-old, because they've had an opportunity to have credit for a much longer period of time. But this is something you could do over time. And with regards to, building up your number of settled accounts, that means things like if you got a zero interest finance on a product, once you pay it off, it now counts as a settled account. If you had a phone contract and it comes to an end and you terminate the contract, it now counts as a settled account. If you take out a loan and you pay off the loan for that duration, whether it's 3 years, 5 years, or 7 years, it now counts as a settled account. The more settled account you have, the more credit worthy you seem to lenders. Takes me on to number three. Having too many accounts can be detrimental. it's a catch-22, isn't it? Because sometimes people would say to you, you need to build credit, and to build credit is to open credit accounts. But on the flip side, having too many accounts is detrimental. And in fact, for some of you that have got a mortgage in the past, you might have been in a position where you're about to get a mortgage and you've got 2 loan accounts. The bank or the lender would always tell you to pay off one of the loan accounts and close it before you can apply for your mortgage. Because again, having too many accounts is indicative that you're overly dependent on credit, and that doesn't bode well to lenders. So just be very careful when you open new accounts, and be very careful when you go out hunting for new credit. If there's certain things that you could pay off outright, then just do it, rather than actually, trying to get new credit. This is more relatable to loans. Having too many loan accounts, again, is detrimental. It's looked upon really badly, and you should keep those to a limit. And generally speaking, with credit cards, it's okay as long as your utilization isn't through the roof. You keep it at a 40-30% level or below, then you should be fine. Leads me on to number 4. Some of you had a credit card with a crazy bill, and now you've managed to pay it off. And out of fear, you've stopped using it, you've cut the card up, don't want to be tempted. Great. The best thing to do in that situation is to close it. Having dormant accounts, whether it's credit cards, whether it's bank accounts, having dormant accounts that isn't active or that are not active will definitely hurt your credit. And that could also lead to even you being blacklisted. Because if the bank ends up closing on you, it's definitely not something you want. So if you have a bank account that you're not using, make sure you close it. If you have a credit card that you're not using, make sure you close it. And most importantly, make sure that you don't allow the bank or the institution to close that particular account against you, because it could lead to you being blacklisted in future. Number 5, for all those who are new to the credit game, you might have started with a credit limit of £250. As long as you're using the things I'm teaching you in this video, you should have an opportunity to increase your credit limit. Get that done as soon as possible, because having a low credit limit is, again, detrimental to your credit profile, because it's indicative that you're not trusted by lenders. If you're only getting a limit of £250 on your credit card, £500 or even £1,000, it doesn't really bode well for you. If you want to maximize your credit score and you want a huge uplift, you need to make sure your highest credit limit is of a decent amount, and it's not of £250 or £500, because again, that would look bad on your credit score, and that would be one of the points that is dragging you down. So make sure your utilization on that £250 or £500 limit credit card is low, because if it's usually low, after about 3 months, you'd notice that the bank would write you a letter or give you a phone call and offer you a higher credit limit. And once they do, of course, with caution, accept it and continue managing the new credit card efficiently and as you've been managing the old one. Brings me on to my 6th and final point with regards to managing existing credit. This is quite advanced for those that are quite knowledgeable about credit, right? If you have a 0% balance transfer credit card, what you could do is you could shift the balance around depending on when the balance is due or when your month restarts on that credit card. So now on to me giving you hacks for those of you that are seeking new credit. Firstly, be careful with the company that you give access to do any search on your credit profile. Generally speaking, searches are graded into 2 categories. You've got the hard search and you've got soft searches. So an example being, if you're doing say an insurance, if you're looking to compare quotes on insurance and stuff of that nature, it's usually a soft check or a soft search. But still, having too many of these on your profile isn't really a great sign. But most importantly, what you want to avoid is hard searches, because these leave a footprint. Obviously, again, in hard searches, there are different levels of hard searches. An example being, when you get a phone contract out, that's a hard search. When you do a mortgage or application, that's a hard search. When you do a credit check for a loan, that's a hard check. When you do a credit check for getting out a new car, that's a hard check. So just limit the amount of hard checks that you have on your credit profile, because the more frequent you have these hard checks, the more the lenders assume that you're a very high risk borrower, because you go around hunting for all these credit because you need it. For those of you that are probably young, 18, 19, 20, you have a high credit score but still unable to get credit. What you need to do is you need to get some kind of credit. Unfortunately, back when we used to work in the mobile phone industry, we used to explain that no credit is equivalent to bad credit, unfortunately. So in order for you to actually have good credit, you need to have some history from which lenders can make an informed decision on you. But you can't have that until you get some credit. So what I would say, if you're unable to get a credit card, if you're unable to get any worthy credit, you could go do things like you could get a small SIM-only monthly contract, like a monthly rolling plan. Let's say £3 a month, £5 a month. And what usually happens is, the more you pay this bill, the more it registers on your credit profile, the more positive it looks to future lenders, because now they see that you have some sort of credit. And genuinely speaking, it works, because when I used to work at this establishment, I would come across customers, I'd advise them accordingly. I'll come across customers with poor credit, I'd advise them accordingly, and they would usually take out a SIM only, and within 3 months they would come back and they would run another credit check for a £1,000 phone or £1,200 phone, and magic, they usually pass. But whereas if they don't take that SIM only and they come back again in 3 months and run the credit check again, they're still going to fail, because guess what? They do not have any credit history. So get credit history where possible. If it's a 0% interest purchase, take it. If it's a cheap SIM only, take it, and just build your credit. Because as I said earlier on, it also adds to your credit age, which over time just bodes well for you and helps you get the best interest rate when you're dealing with lenders. On to number 3. If you do get a 0% purchase, please make sure you make the payment during the moratorium period. The last thing you want to do is not make the payment then, and then you start having the interest rate reflect on your credit profile, because now it shows that you no more owe £300, now you owe £320, which again increases your utilization, which on the other end nosedives your credit rating. So make sure you pay during the moratorium period. And in addition to that, be very careful when you apply for credit. Be very mindful as to which credit you apply for, because all of this shows up on your credit profile, and future lenders can judge you accordingly. An example being, if you're applying for Klarna and you're using the credit to buy trainers from these websites, or clothes from these websites that now let you purchase clothes and trainers on finance, I couldn't tell you how bad it looks to any future lender that you're taking credit to buy a £60 trainers. It just looks bad. However you cut it, however you explain it, it looks bad. And they just see you as an irresponsible borrower. So make sure you stay clear from retail accounts and things like financing clothes and stuff of that nature. With that being said, the video has come to an end. If you need any further assistance, my details in the description box. Drop me an email, like this video, share it. It's quite a long video. I'll probably say around 20 minutes plus by the time I edit it. But I thought it's extremely informative, and I've had so much inquiries with regards to my credit repair services that I offer through my consultancy firm. And I thought, you know what, I'm also going to put some free knowledge out there so that if you guys want to help yourself, you can get some of the things going yourself and make better choices for yourself. But most importantly, this is a finance channel. I talk business, I talk entrepreneurship, I talk investment. And it's almost hard to get to those levels where you can invest consistently, such as buying houses, if you don't have the best credit. So, it's all part of that financial journey that we both go on together. So if you've enjoyed this video, hit the thumbs up button, subscribe, and most importantly, share it to your circle. You do not know who may benefit from this. It might be you, it might be your friend, it might be your dad, your mum, or even your co-worker. So share it around. Thank you, and I'll see you next Sunday at 6 p.m.